Hey everyone, this is Bhupen coming to you today to share my trading success, I would say, over for crude oil futures trade that I did today. I made 60 grand in one day, not bad. As you all know, a lot of people are glued to the TV or phone, a lot of YouTube and Twitter, Facebook, social media, and glued over for this Iran war. But me, I'm investor. I'm a trader, so I just decided I'll take some futures trade on crude oil because I knew this was going to change you know change the course of how the world consumes oil, and based on previous events, and I kind of wanted to take some trade, and luckily I was fortunate enough to have the trades on my side. So I'll give you a quick rundown of what I did and why I did, so that it's helpful for other folks behind behind how to trade futures and all. Okay, so let's start with the sequence of events. Well, here. So this is crude oil future. This is CLK 2026. The way you look at it is in TradingView CLK 2026. This is May future. What this means is this is the price that you expect the crude oil future to be in May, right? So that's what we're trading. So this is when US actually attacked Iran on February 27th, Thursday, and you can see it was already consolidating. Maybe there was news previously, and it was already up, and it was consolidating here, and here you can see it was already up a little bit. I got wind of it only here, so although I was late, but it's not too bad. As you can see, when US actually started the war, the crude oil went up by roughly 74% when it hit all-time high, from roughly $65 up to $114, right? That's 74% up. The reason I decided to buy this is because if you look, sometime, oops, not this one, CL1 crude oil future, US actually did hit, I think Israel and US did a joint strike somewhere here in July, and crude oil jumped from say $55 up to $77, and then this is roughly 60%, roughly, well, 40%. So I said, at least if I were to take this trade, this at least has to go 40%. That was my thought process. So 40% from here, and I was thinking at least this was my target, $91, and then today it just went to $120, right? So I took a couple of trades here, and I went long, made some profits, and then I said, okay, so this is where it would likely stop, and then I went short on the wrong side of the trade, and then the short actually was very bad. Luckily I didn't do futures, I did took options here, but I was pretty certain there were some news that the US was going to open Strait of Hormuz with Navy security, and government was offering some insurance plan as well. So I stayed. I did not cover my shorts, and then as the day passed, it just went raid, and ultimately it went below where I purchased my options. So I made profit in options, and then I started shorting. I think I started selling the futures. So as soon as it started going red, I started selling here, and then I covered somewhere around 85, right? So that's how I made I made the profit. But overall, if you look at long-term trends, previously during COVID, oil actually went to $130 a barrel. All right, and then this is, yes, this is high, but almost, I guess, almost close to the COVID high, right? I think this has to, well, $90 is not sustainable, and obviously $120 it had to come down at some point, which is why I took the short position on this trade. But what happens from here, I think it'll likely slowly creep up, and then at some point, whenever it is not sustainable, it'll probably come down and settle around like $70, because nobody in the gas station can afford oil up by, I don't know, 50 to 100%. Okay, I just want to be transparent and show my profits. So let's start with this. Today I made $24,000 during the day and $5,000 overnight. So this is roughly $30,000 on my Robinhood account. I'll show you how I got there. As you see, these are my recent trades. Actually, my it was 100% success rate. So every single trade I made today made profit. So for example here, as you can see, this is the profit, $320 profit. $2 was the fee, so the net profit was $317. And then if you look at all of this, $237 profit, $757 profit, $221 profit, or maybe I made a $4 loss here. $195 profit, $295 profit, $815 profit, $15, $923, $675, $1235 profit, and then this is the put option that I purchased on Friday. It doesn't show the profit here, filled 1430, but I did make roughly 3,000 profit here. And then these are my puts. Oh, actually I bought puts today too, and then as soon as I knew, bought puts, and then I made 6,000 on the future, right? So if you add all of this, how many trades I made, I don't know, maybe 20 trades. I made a lot of trades, and every single one was profitable. So that's how I got this 30,000 profit in Robinhood. And let's go to my E-Trade account. So forget about this. This was just me liquidating some of my Tesla stocks, but I made 16,000 profit on USO put options. And then USO another put option 1,300, 6,400, 6,300. So total, if you add this up, 30,000 here, 30,000 here, so 60,000. But what is the takeaway? How do you make that much amount of money? Because this future that you buy, every point it goes. So I think if you look at it, let's do this. Yeah, okay, 2026. So look at 26, and then see if you purchase this. Where is? Okay, order review quantity. If you buy one, it costs you $19,000 to buy one future of crude oil, right? And then if you look here, the multiplier is 1,000. So every point, every tick size, it increased. Tick value is $10, and then you are leveraged 5x. So you make a lot of money, and you also lose a lot of money. So it's very critical that you understand the risk here, right? The risk and reward, they are both leveraged a lot, so you just gotta be careful. That's it for today. Thanks for Thanks for joining, and have a great day. Thanks.